What's going on, guys? In this video of Should I Invest, we're going to be talking about CELH. Now, before I dive into it, make sure you guys go ahead, smash that like button, comment down below what stock you want me to do next so we can get right into it. All right, so we have our handy dandy MarketSmith tool that's going to give us all the information we need. We also have our handy dandy Excel sheet that tells us whether it's going to be a buy or sell. And we also have Yahoo Finance to give us a little bit of the information we want to secure that information. All right, first and foremost, just looking at this MarketSmith tool, looks like it's already given people an entry right here at the pivot of around 126. It gave them the stop loss here at around 116, and you have your targets which are already hit. So right away, MarketSmith is already well ahead of the game, and it's already given traders those profits. All right, so let's go ahead and bring that Excel sheet right here. Let's go ahead and take a look at CELH. All right, plug that in. We have some information right away. Negative EPS, which is not something we want to see, and because of that, we don't have a PE. But let's go look at the return on equity. Return on equity we can find right here. And of course, return on equity is negative as well because of that negative PE. All right, so we're looking at total debt now. Let's go ahead and pull up the Yahoo Finance sheet. Boom, we got that right there. Let's shrink that a little bit. Perfect. Let's go and look at the balance sheet. Let's look at total debt. We're going to come down here, total debt right here, 357. We're going to plug that in, and we want total assets, which is right here. So just right here, not bad, 3.4. That's a good sign there. Now let's look at current debt. And to do that, we're going to come here and look at current debt, 161, not bad at all. And let's go look at the current assets. It's right here, current assets, 917. All right, we're going to go ahead and plug that in. Perfect, 569. So looks pretty good here on the current debts and even the total debts. The numbers are balancing in regards to those. Let's move over and take a look at the operating income. To do that, we're going to go to income statement. We're going to look at total operating income. Actually, let's take 2022. So right here, we got a negative number. That's why you have a negative EPS. Let's look at total revenue. Total revenue right there. All right, so minus 24. We already knew this was going to happen. They are a negative EPS. And now we want to look at cash flow. Is it increasing or decreasing? We're going to come here and look at cash flow. So the last 3 years, minus 99, and currently sitting at 122. So cash flow is actually increasing here. Now we want to see how much management owns. And to do that, we're going to jump over to the MarketSmith tool again. You can see right here, management owns 3% of that. All right, so we're going to plug in 3%. And we're going to take a look at the funds. Are the funds increasing or decreasing? To do that, we're going to come here on MarketSmith, look at the fund ownership, and this number right here is telling us already that we went from 381, 407, 404, 400, 424, 512, 535, and 545. So pretty much from June 2021 to March 2023, funds have increased their position. All right, so going to go ahead and plug this on an increase, and it gave us a fail. All right, so, and I'll tell you why that is. All right, so once you start going into this negative EPS right off the bat, you're getting 3 red marks right there. Okay, a lot of these names that are negative EPS are going to have a hard time coming out on top, especially if you're not making the correct income there. All right, so, or just not balancing out in regards to your operating income. So it is a fail, but what it does have going for it is that the total debts and total asset is very good, 3.5 times. They can pay off their total debt 3.5 times by their total assets, and even their short-term debt to asset ratio, they're 917,000 short-term assets, and the short-term debt is only 161. So you can pay it off 5.7 times. So that's a significant thing. Now, with that said, let's go ahead and take a look at the chart. Chart is sitting right here, essentially at all-time highs. Does this mean do you start a position here, or what's the game plan? I personally wouldn't start a full-size position here. Maybe start with 1/10. You are at all-time highs. Maybe look at possible, averaging down around 83 if it does pull back there. But just because the stock is at all-time highs doesn't mean you have to FOMO and buy it, right? So wait for that. There's other opportunities that you can take advantage of, option opportunities that you can take advantage of if you're afraid of missing the move, like selling puts and whatever the case may be. But those are other videos that you would have to we would have to get into. But I think 1/6, 1/10 position size, if you want to start here with the opportunity to add maybe at 81 and then around 44 would be the best case scenario here in case things decide to turn. So with that said, I hope you guys did enjoy this video. I think a member commented on the last video to do CELH, and that's why I'm doing it. So if you guys want me to do a stock that you would like, go ahead, comment down below what stock you want me to do, and I will gladly do that next. And if you guys don't already, make sure you go ahead and get your MarketSmith tool. The link is in the description, and they always have promos. All right, thank you for watching, and we'll catch you on the next one.